Welcome to the CCN podcast, where we discuss the latest trends, companies, and people shaping the cryptocurrency space. I'm your host, Jake Sylvester. Hey, what's up, guys? Welcome to the 9th episode of the CCN podcast. So, first off, I want to do a little housekeeping. As some of you noticed, episode 8 was a standalone interview. Up until now, a lot of the interviews we've ended up doing have been at the tail end of episodes like this one. Now, with episode 8 and the Wire interview, Wire had just come out with a major press release in a partnership with MakerDAO, who we previously did an interview with. So it felt prudent to release that before the release of our This Week in Crypto episode. And in the future, I think we'll do this more, sometimes with less urgent news. But at least for now, I think we're going to keep a interview at the end of this episode as well. So moving on, the price across the market was pretty much flat with one major exception, which is Ethereum. So overall, Ethereum was down 11%, following drops of 24% last week and 14% the week before that. Bitcoin was actually up slightly this week, following drops of 12% last week and 15% the week before that. And the coin market capitalization was pretty much flat this week. So just right off the bat, we can make the observation that this is finally a little better than the last 2 weeks. At the end of the day, though, it's still a bearish market. So one could ask the question, why is Bitcoin performing better than other cryptocurrencies in this market, even if it's not winning and up at that $7,000 and $8,000 level we saw it at several weeks ago? So Tom Lee of Fundstrat had an interesting take on this. He said that Bitcoin is the best house in a tough market. There are some other theories, though, around Ethereum specifically and why it might be down 11%. So, if you'll remember in the great bull run of 2017, most of the ICOs that were receiving money were receiving it mostly in Ethereum. So, analyst Eric Wall had an interesting take on this. He said, quote, "The problem when you give millions of ETH to ETH competitors is that when they unload the ETH on the spot market and short ETH on the futures market before that, so they're not only securing the funding, but also manipulating the underlying spot market in favor of their shorts." So essentially what he's saying here is that these projects with millions of Ether are taking out shorts saying Ethereum's going to go down, and then dumping this Ether on the market as the price goes down and making money not only on the sale of the Ethereum, but because they manipulate the market to drive the prices down with these shorts. Some have said this is a bit excessive and conspiratorial, and pointing out that Ethereum's down could just be a result of a very strong dollar, which has also caused the rest of the market's subpar performance. In light of a strong dollar, Bitcoin's performance might even be viewed as favorable, and it could be seen as performing well. Despite all the downside, we have had a few clear winners this week. Internet of Things startup VeChain, infrastructure play Ontology, and retail play PundiX are all up over 50%. That's a huge deal in what has been a very depressing bear market. There were also a lot of positive signs coming out of the institutional market this week. For instance, Crypto Facilities launched a product that allows investors to bet on the future price movements of Bitcoin Cash. This is a big move because it's the first officially regulated product that allows people to bet on Bitcoin Cash in US dollars. It definitely makes up for some of the lost ground that Bitcoin Cash has. When you look at some of Bitcoin's investment products on the CBOE and the CME. Speaking of institutional investors and investment products that are affecting Bitcoin. A new Bitcoin exchange-traded note is available in U.S. brokerage accounts. Now, new is a bit of a funny term here. The exchange-traded note is not actually new, as it's been around on NASDAQ Stockholm since 2015. What is new is that it can now be traded in U.S. brokerage accounts without the premium of other over-the-counter publicly quoted foreign debt instruments like the Bitcoin Investment Trust. This is a pretty big deal because it allows investors to invest directly with fiat from a brokerage account in Bitcoin. It's not an ETF, but it's somewhat of a consolation prize, as one of our authors said. Further demonstrating the bullish sentiment that institutional investors are putting out, Pantera Capital is raising another fund, this time for $175 million. This dwarfs their first two funds, with their first fund being just $13 million and their second fund being $25 million. Now, a recent filing with the SEC indicated that they already have $71 million in commitments. It's not clear who these investors are, but that's clearly a lot of money in what's a bear market, and we're hoping to see much more flow into investments if we're really going to get this market started again. Next up this week, AT&T is being sued for something that's become a huge problem in the cryptocurrency space. It's something called mobile linked hacking. Here's how it works. I'll try to log into an account on, let's say, Binance, and I'll have two-factor authentication enabled. So I'll type my username and password, I'll get in, and then I'll get a code sent to me via text that I have to enter into Binance to get into my account. It's another security measure beyond just a username and strong password. So anyway, what ends up happening is carriers are too easily transferring numbers over to people who are social engineering. So in the case of this poor investor who ended up losing $24 million, an individual working with a hacker impersonated him and convinced an AT&T store employee to give them access to the investor's phone number without requiring this individual to show valid identification or provide the PIN code to the account. Now, what the investor is actually claiming here is that AT&T was negligent. Just getting hacked isn't a crime, but being negligent and then getting hacked presents a case where he could actually end up winning some amount of that $224 million. Now, you'll recall that the original amount was $24 million, so why the other $200 million? Punitive damage. This will be a big step for cryptocurrency investors if he wins, as it'll demonstrate that when a social engineering attack affects a provider, the responsibility to remediate that is on the provider and not the individual themselves. This has been a huge issue in the cryptocurrency community, and we'll be watching closely to see how this plays out. Finally this week, we have an interview with the CEO of Zilliqa, Xinshu Dong. Zilliqa is a cool project, and it currently ranks 33rd on CoinMarketCap with a market capitalization of $268 million. Hey, how's it going, everybody? I'm here with Xinshu Dong, the CEO of Zilliqa. How you doing today?
Hi, I'm doing good. How are you?
Pretty awesome. So tell us a little bit more about Zilliqa and what the problem is that you guys solve.
Sure. So Zilliqa is a new blockchain. The problem it tries to solve is to say, can you provide a platform that can process, let's say, thousands of transactions a second at least, but then at the same time, also maintain very high decentralization and high security. So that is sort of the challenge Zilliqa decided to take on. If you look at today's public blockchains, such as Ethereum, is processing about between 10 to 15 transactions a second. So in the old days, that could be enough, but nowadays people definitely want more because when you move more and more serious applications onto the platform, and then you may demand much higher throughput in terms of TPS transactions per second. And then you also have different ways to scale this up by, let's say, having slightly more centralized architecture or by having some transactions running off the blockchain. But we do believe the original spirit of blockchain, which means, we process things on the blockchain itself and maintain very high level of decentralization. So that's sort of the spirit that Zilliqa is going after.
Yeah, that's definitely an interesting idea. So how do you guys scale this up while still maintaining a decentralized system?
So that means when we apply any scalability solutions or scalability techniques, such as, let's say, sharding, such as a more efficient consensus algorithm, we have to make sure that at each step inside our Zilliqa protocols, many nodes are involved, a larger number of nodes involved. And then to give you a very concrete number, at least you have, 600 nodes or even 800 nodes involved. So that means at each step, the decision-making process is very decentralized. It's not controlled by just a few nodes or 10 nodes, 20 nodes, or things like that. And that definitely makes the design of such protocols much more challenging. But that's something we sort of have achieved through our design and implementation.
So when you say you have 600, 800 nodes involved in processing a single transaction, do you guys not have every node processing every transaction?
So you see, here is a sort of the fine balance that Zilliqa tries to strike. If you look at the traditional Bitcoin and Ethereum network, they may have 10,000 nodes, 20,000 nodes. And then every single node inside that network processes every single transaction, right? So that's clearly very secure. It's very resilient. But on the other hand, some people may start to wonder whether it's really necessary to have every single node processing every single transaction. So we want to strike a balance. Here the balance is what I just described. We want to make sure we design the network in the more efficient way, but during the process we still want to make sure every single step will involve a larger number of nodes. And how do you do that? And how do you do that in an efficient way? So that's why we apply the idea of sharding. And even with sharding, there are many questions you have to answer. So at the high level, sharding means you divide the global network of, say, 10,000 nodes into 10 groups. And then in that case, every group will have 1,000 nodes. But how do you do the division? Which node goes to which shard? And do you update such division over time? And then we have transactions and smart contracts coming in. You want to process them. How do you do that? Which transaction or smart contract goes to which shard? So these are sort of many of the questions we have to answer. And when we design them, we have to make sure that, in terms of achieving high throughput or high performance, we don't sacrifice too much on the security and decentralization part.
So I know this is something that's been proposed in other projects, right? You have multiple Ethereum improvement proposals out there for sharding. And obviously you have projects like NIM doing this with sidechains. So talk to me a little bit about what the difference is with Zilliqa. I'm guessing there's some advantage to having built this from the ground up rather than kind of throwing it in there later.
I think, number one, we are quite different from sidechains because sidechains, by its name, they are not on the main blockchain. So that means you have a different set of nodes running a separate consensus protocol, and there you can apply many optimization techniques you might want to have. The benefit is, of course, you can customize your sidechain design according to your particular needs, and sometimes you can definitely run much faster because you have reduced requirements on security and decentralization with sidechain. But of course, what you are losing with sidechain is that now not every single node on the main chain can verify your transactions because they will largely trust what's going on with the sidechain, or they can also they can only check periodically or things like that. What we want to achieve is on-chain high performance, because we believe even if sidechains become very popular, you still need to synchronize back to the main chain, at certain intervals. So eventually, when you have many side chains, you still want a main chain that's efficient enough so that it can communicate with all these side chains without a problem. So that is the problem we want to solve. So that's the first difference with sidechains. Now, coming back to sharding, there are many proposals of sharding. The original idea of sharding came in the database research field. But when you apply that to the blockchain environment, things are just quite different. So although the high-level idea of dividing and conquering still remains, you are looking at a slightly different problem here with the blockchain. Number one is it's very hostile, because we talk about presenting, nodes. What do presenting nodes mean? Is that nodes in the public blockchain can do anything malicious. They can be so-called arbitrary malicious. They can drop your packets. They can forge your packets. They can create a new package that seem to impersonate other people. So under such conditions, you have to design new secure algorithms that can produce the block data without being compromised by such very adversarial attacks. That's number one. Number two challenge of sharding in blockchain is here it's not just about data storage. Here it's also about computing. And of course, computing is linked with data. So all these challenges come together, makes sharding just very challenging. What we do at Zilliqa is to say we take a practical step forward. We do something called network sharding. That means at the storage level, we don't have to split the state. So that's a fundamental difference between sharding at Zilliqa and sharding at Ethereum, because Ethereum is planning to do something called state sharding. That means, different nodes will store different portions of the global state. Here at Zilliqa, we do something different. Every single node still has a global view of the global state. So that just makes the design of sharding much more practical, in our opinion, to be achieved, for example, within the next few months. So that is sort of the way we are going. Of course, going forward after our mainnet launch, to say we may even think about other ways to optimize the design. So state sharding definitely is one of the interesting directions to look at.
What's the biggest problem with state sharding?
So there are some challenges with state sharding. Just one thing, for example, is that after you divide the state into different shards, every shard is a group of nodes. It's not very straightforward to move the nodes around, because as one node living in one shard, you basically understand what's going on within your shard, but you do not necessarily understand what's going on outside your shard in other parts of the network. But on the other hand, it's always desirable to move nodes around at certain intervals, because that will make the network much more resilient and much more secure. So that becomes a challenge. And there are also other challenges in state sharding, because you basically divide the states into different parts. And when you have transactions that will involve different parts of the network, then you sort of need to have very clever ways to share the information across different shards without imposing a very high performance penalty. So these are some of the challenges people are still thinking of for state sharding.
And I guess the other real challenge here is, you mentioned the field of database research, right, and sharding there. Because every node in a database network is trusted, you don't necessarily need a consensus mechanism beyond, say, a SQL journal on the master node.
Right. They may not be fully trusted, but I think on the other hand, they are trusted in a sense, right? They are not assumed to be as malicious as the nodes in the public blockchain today.
Yeah. So here, you have to somehow make sure that the entire network has a full view of the state of the network, while also not having a huge performance issue as they try to apply the consensus mechanism to 1,500 transactions per second.
Right.
So I guess another challenge that I've seen as these blockchains start to scale is actually just bandwidth. Is that something you guys have seen as a problem yet?
I think that's very true. I think in the near term, the real bottleneck for blockchain throughput is probably the network bandwidth. If we can have faster networks, let's say, I don't know, 5G network, we can definitely improve the throughput to a very large extent. So that's sort of a physical bottleneck we have to get around. That also means in our design, for example, Zilliqa design, we have a lot of optimizations just to work around such limited bandwidth. So whenever we can share the delta of changes, we will share the delta instead of the exact changes we are making. So, and we also design our network topology in a way that can better utilize the network bandwidth available. So yeah, in that sense, you're absolutely right.
Oh, okay. So kind of like a Git style Markov change journal. if that makes any sense. Yeah, that's definitely an interesting optimization. But I guess the delta actually has to be calculated per node because the nodes are at different changes or at different states of downloading those changes.
Oh, so when I say deltas, right, they basically refer to changes to, let's say, account balances or changes to the values of variables in the smart contract.
Got it.
So these things are supposed to be global.
Okay. And then I'm guessing you have to apply some sort of consensus mechanism there to make sure.
Consensus stays at ease. It's just like after consensus, you also want to share some data across. And then at that time, we have to bear in mind network bandwidth is always limited.
Got it. Yeah, it's really an awesome concept. And I love the way that you guys are tackling some of these issues that, some of these other older communities haven't necessarily got to yet. So you guys can apply kind of new thought frameworks without having to worry about these large change of the existing transactions. So how did you get into crypto?
I did not sort of intend to get into this cryptocurrency world. My background is mainly on technology, especially cybersecurity. Naturally, I was, attracted to blockchain in general because that's about designing protocols that can run not just fast but also secure. I started to work on private blockchain designs and implementations, about 2 years ago. So at that time, we were working for some customers or clients. And that's about the time we started to realize that our technology has a huge potential that goes beyond just private deployments because that's usually small in size. And then we started to think about this idea. Of course, we realized, even in the beginning that there will be many more challenges when you move this to the public blockchain. But I think the public blockchain is a way to go to really realize the potential of our scalability solution. Because if you design the incentive layer properly, you can attract many nodes to join the network. While in our technology, it has this property that the more nodes you have in your network, the higher the throughput it can go to. So that's how we start to develop this public blockchain. And then, of course, to design a proper public blockchain protocol, you have to think carefully about the token structure or the incentives so that you can attract miners. So, that's sort of how I started to get into this space.
So the private clients and stuff, that was kind of in the fintech space, right? If I remember correctly.
It goes beyond just fintech. We had different sort of partners or clients. Some were in the fintech, some were in advanced manufacturing, some were in shipping or e-commerce.
Okay, cool. So I'm guessing that kind of influenced your decision to make a public blockchain that could kind of work across all areas rather than something more vertical specific like a ship chain or something oriented toward a database specifically.
Yeah, I think we were still just providing a platform. Of course, at that time the platform was mainly used for private deployments. Now it's still a platform. Now the platform is more open. It's meant for different types of use cases in the public space.
And then one of the other things I find crazy about you guys is you really only started in June of 2017. And then you had this crazy ride up to over $1 billion market cap. And you guys are sitting at like 30th on CoinMarketCap right now, I think. So talk to me about that ride through, the peak of 2017 and scaling out a team and some of the challenges you faced there.
Yeah, I think sometimes people just don't realize that it's actually not too long since the beginning of the project. Yes, it's quite challenging. I think there were several things we leveraged on. So number one is this is sort of the third iteration of the code base. So the first one was in the research lab at National University of Singapore. And then that was sort of the research prototype. And then we, as I mentioned, we started to work on private blockchain. We sort of, wrote a completely new code base. And then we started to work on the public blockchain. Of course, many things were just quite different because in the private blockchain you could make many assumptions in terms of performance or security, and sometimes you don't pay too much attention to decentralization in the private blockchain. But here, things are different. So we started a third code base from a new. So sort of we had the experience and expertise. And another thing I think which is very important is the team. Many of the team members had worked together for a very long time. Like I worked with Predict since, 7 years ago. So the team really believed in this idea. And then we can work together very hard, crazily hard, I would say. Even after our token generation event, we sort of kept that kind of momentum. And I think sometimes the community do recognize, we are quite a unique team where we do believe in what we are building and we really deliver what we promised to deliver. So that's how I think we got into, that kind of good reputation today.
Yeah, the growth in the blockchain space has just been insane. I mean, to use another example, right, Binance. Right. Remember this Forbes article, 7 months ago, Binance didn't exist. And you're looking at the trading volume, and it's billions of dollars a day. So what does it take to really scale that team? I mean, you said you'd worked with Pratik, your chief scientific advisor, before. But I mean, you guys have dozens of core developers, a huge advisor team. And I don't mean huge in size, right? I mean just what these people have accomplished in the past. So what does it take to maintain that momentum and really create a successful project?
I think definitely we are fortunate, I would say. And on the other hand, many of the core team members have very good connections. So basically, many of our advisors are friends of the core team members. On the other hand, I think we do not really have a very large team. I think the size of our team is very small, comparatively speaking. But somehow we assembled this very strong team, I would say. And in Singapore, hiring tech people is not that easy. It's actually very challenging. But we got good talents. I think somehow it's also relevant to the reputation of the project. So these people are genuinely interested in the project by itself. And then secondary is about, whether they want to come to Singapore and work with us. So in that sense, people really want to devote all their energy and contribution to the project and make it good. There's a very strong, interest in making the technology right here in the team. It's less about, what do we get out of them, eventually. It's more about we have to get it right. So this is the important thing, and we have to do it in the right way.
Yeah, and one of the things I don't think people understand about your team necessarily is a lot of these other more vertical specific chains are just kind of building on other blockchains. I mean, you guys had to build a compiler, a whole language around this new blockchain. So I think some of those challenges specifically are kind of amazing that you've achieved them despite your really small team.
I would say yes. If you look at our team, it's 15 people. But we saw the need to have a new secure language, rather than just retrofitting the existing smart contract languages. Of course, I think it's important to try to secure the existing language, but we want to provide an alternative where people program in this new language, and after they do that, it's much easier to secure the smart contracts. These things are not just very new or invented by us from scratch. Many of the research works in the past have suggested this way, except that people have not put that into practice in the blockchain space. And we wanted to do that because of our research background. We understood these were the good things, and we just wanted to make them work here at Zilliqa. Of course, we are quite ambitious. With such a small team, with such limited resources. But I think these are important things for someone to accomplish in this space.
Absolutely. So where do you guys see yourself in 5 years?
I think, the best scenario for me personally is that after 5 years, people don't somehow see us this often. That would be my wish. That means we have delivered a very viable platform at that time, and the community can just keep improving on it, keep leveraging it, keep even having some self-initiated effort to experiment with the new ideas. And I think some of the core team members will definitely be happy to mingle with the community team members, give them advice, and sometimes lead some of the more substantial efforts in make the platform even stronger. But definitely, I want Zilliqa to become the platform for an ecosystem, not just a product produced by the several of us.
And as far as governance, do you guys see yourselves moving to a decentralized autonomous organization? Do you see yourself kind of remaining in this corporate CEO role? How do you see that unfolding going forward?
I think it's definitely my wish that the governance can be established in a more decentralized way. So I think in the beginning we have to spearhead for some time to make sure that the platform is delivered and is running fine, and we can get good traction from apps. But going forward, I think we will definitely spend more time thinking about how do we restructure the model so that the community can have a better sort of incentive and influence on the platform. Because eventually we took the funding to deliver a public project, and the public project definitely belongs to the public in the absolute sense. So it's just like we don't have enough time to think that through. But this is definitely something on our agenda.
Absolutely. Yeah, it was awesome talking to you. I really hope to talk to you guys again in 5 years, despite your wish that no one hears from you. So yeah, have an awesome day, and it was great having you on.
Thank you, Jake.
The views and opinions expressed on this show are only those of its hosts and guests, and sometimes of no one at all. The CCN podcast was produced by Rockwood Audio and hosted by ccn.com. To find out more about CCN and the podcast, check us out at ccn.com. You can also follow us on Twitter at CryptoCoinsNews. If you enjoyed the show, please be sure to rate and subscribe.